Ladies and gentlemen, there's a number of firsts for me here tonight. This is the first time I've ever presented ECR Minerals. It's had three other names since we started the company, but it has a very bright future. The second thing is that I've never presented in a pub or had a beer at the same time as I did a presentation, so that takes us back to the old days in Kalgoorlie. And I've never done a presentation for a company where the gold price is $1,400 an ounce. The copper price is 400 and something, and I can't believe it all. And really, we live in miraculous times as far as the value of our products are concerned. And as you assess the companies over the next few years, you'll look more and more at what the costs of production are. And hopefully, you'll be like we are tonight, seeing costs that are really quite often a third of the value of the goods that are being delivered, which used to be heaven for mining companies. ECR is different. Michael Silver, my chairman, and I have been working together for 30 years, 28 years, and we are trying to create a company that has protection on the downside and great opportunity on the upside. As you all know, if you've looked at the history of our company since we floated it in 2004, we had a disaster in West Australia a couple of years ago from which we're only just recovering. But we're fortunate in that the market has been good and our supporters have stuck with us, and we've got some what we think are first-rate assets that can deliver for shareholders. Since this is an informal thing, if anyone wants to interrupt and chat, I'm happy. And John, I'm sure you'll have some questions, and we'll always welcome them. Michael and I look to find assets where we can add some value. And we've done that a number of times in the last couple of years. We're happy for those assets to be in most places, but we want them to be in places that we're familiar with, where we've got some real capacity to take advantage of them, add value to them. So we generally speaking are in places where they speak English quite commonly, and we're in areas where we've operated before. Our business model is based on finding undervalued things, seeing if we can add value in a number of different, very specific ways, and then seeing if we can realise it. We've got one good example that we've been involved in the last couple of years, and that's a company called the Swan Group Limited, listed in Australia at SWN. In Makeda, we had the Meekatharra gold asset. At the time, we had some other tenements, and we found one small tenement, a hole in our tenements, which we pegged, which had some base metal credits from some old drilling. A geologist who was working for us at the time identified it. We pegged it for $1,000. We put it together with some of our other tenements. We had spent about $300,000 in the ground on them before we disposed of them, and we sold them to this company, Swan Group, which was a shell with $2 million in the bank and no particular assets. We took Susan Verncombe, who was our exploration manager. She became the managing director, and Mick Elias, who's one of our independent directors, became the chairman. They've raised so far about $20 million, and they've made a discovery. Our stock was escrowed during the course of that escrow. That is, we couldn't sell them. We were approached by the company and some of the shareholders, and we were able to sell 10 million of the shares we received. We got in the then 10 million ordinary shares and 4 million performance shares. We sold those shares for $3.5 million, and we had therefore a profit of about $3 million on our original investment. And we still own the 4 million performance shares, which run until 2013. And that company will vest those shares to us if they prove up 350,000 ounces equivalent of gold. And they're probably 40% of the way there, probably half the way there. The company, Meekatharra, is about 100 kilometres south of Sandfire, which some of you may have followed. It's a discovery in Australia 3 years ago. It's now worth about $700 or $800 million. This was a similar discovery in the mineralogical type, but it's much smaller. It hasn't been the screaming success of the other one, but it epitomises what we try to do, which is identify, put management together with the fundraising capacity, and then get it going. And then, if we are able, realise the value. And we've been able to do that in this project. So that is, if you like, is the model that we're working on. We knew the ground, we knew the people that came in, we put them together with the brokerage house. We did all the things necessary to enable the project, and that's how it's worked for us. And that's what we intend to continue to do. Michael Silver's been in the game. He's built mines that have produced over 3 million ounces of gold now, and has a vast experience in our industry on a number of different continents and a number of different environments. And I'll come back to his experience in Papua a little later. And I've been in the game since I went to university in 1970, sold my first bar of gold in Kalgoorlie for $100 an ounce, and we got $80 Australian for it, and we're heading that way again. And I've been involved in a number of mines that have been successfully developed and a number of projects that have had their problems, like Meekatharra. So I do know the game and do know what can go wrong and what should go right. Michael Elias is non-executive director, came first in my year at Melbourne University in geology, and is a principal consultant for CSA, one of the leading geological consultancies in Australia. And young Stephen has joined us as financial officer since Michael de Villiers, who's here with us tonight, stepped down, and is helping run our London end and is doing a great job with it with Michael's assistance. So what we have are a series of assets that we are in various stages of development. I'll come back to ACS at the end because that's a specific asset that's here in the company for a specific reason. I want to speak a bit more about it. The MAC Resources Group, we will have a 20 to 30% interest in that if you've been following our releases. You may know that next week on the 21st of the month, there's a shareholder meeting to approve the issue of that stock to us. It's performed very well in the market since its major shareholder, Kevin Maloney, agreed to finance it. And we believe this asset has the capacity to become an engine of a very successful copper company. Warm Springs Renewable Energy is an offshoot of that in some regards, in that in establishing the job around the Copper Flat project, it became apparent that a solar-powered installation could have some commercial benefit, and we're working that up with the possibility of becoming a substantial solar producer in New Mexico if the environment for that, in terms of what the utilities are willing to pay for power, makes it sensible. Otherwise, we will be able to deliver power to the mine. We recently got involved in an Argentinian uranium project, which has not been particularly successful for us, but in doing the work in Argentina, we identified a fantastic area of unpegged gold mineralisation. It's in La Rioja state, which had gone through a period of being anti-mining about 2.5 years ago, and everyone basically abandoned the place. And this piece of ground was just available, and we pegged it. So it's important to understand that it's not going to cost us a lot to keep and develop this, which is why, in the short term at least, it will stay in the portfolio for direct development. Silver Swan I've spoken about. Meekatharra is in the hands of an administrator. It's under contract to a Canadian group who are planning to list it on the Canadian Stock Exchange. Peni is just one of the most interesting projects I've been involved in. We'll go into it a bit later, but it appears to have an enormous amount of gold. It's in a very difficult area to mine and develop, but if it's successful, it'll be very lucrative. Copper Flat. Copper Flat is a copper, gold, silver and molybdenum porphyry deposit in southern New Mexico. It's a medium-sized deposit, but it has a lot of attributes that make us believe that it is relatively easy to develop. And we've put together a team to do it, and we've found a corporate vehicle for it, which we think will be exceptional. Kevin Maloney, you'll see there, and this is fortuitous, it's all been happening over the last 6 months. Kevin is known to Michael Silver and I since 1983-84. He used to manage a company in Australia called Elders Resources Finance, was a big lender to the resource business. In the last 10 years, he established a company called the MAC Services Group Limited, which supplies accommodation to the mining industry in Australia and has 5,500 rooms, made $30 million after tax last year. And during the course of this transaction, our transaction with Kevin's company, the MAC, he received a takeover offer for that company for $680 million, and he owns 52% of it. So Kevin, who I had presented this project to 6 months ago, all of a sudden has become an extremely wealthy person, and together we are seriously developing this company, the MAC Resources, as what we think will become a real powerhouse in the mining business. That's his intention, and that's our intention, is to work with him to do that. We like the property because it's in an area we understand. My sister's lived in Albuquerque for 25 years. I go there quite often. This is a desert area. It's very similar to Western Australia, except that it snows there because it's 5,000 feet up, and it's 80 kilometres, 80 mile, 110 mile from the Mexican border. It's very well serviced by infrastructure with that main highway coming south. Those are two big dams that supply water, but we've got our own water supply near the mine itself. And it is on, sorry, where's that other one, Steve? Is that on the map there? No. It's on a belt of copper deposits that run from Copper Flat right through southern Arizona and into Mexico. New Mexico was the third biggest, and historically is the third biggest producer of copper in the US. And at Silver City, there's a wealth of expertise. Just near to the east of Silver City is Chino, which is one of the oldest copper mines in North America and one of the biggest, which is owned by Freeport. It used to be a Phelps Dodge property. And there's an enormous amount of infrastructure and people there, which is very useful to us. Briefly, when we got into the project, there were around about 500 million pounds of copper, 220,000 ounces of gold, 3 million ounces of silver and 14 million pounds of moly. We did an exercise with SRK in conjunction with the drilling of modernising, bringing up to standard that resource reserve, and we now have 860 million pounds of copper and about 27 million pounds of molybdenum. In the next month or so, we'll do the assaying that will bring the gold and silver to account. We expect the gold to increase by the same ratios to about 300,000 ounces and silver to about 4.5 million ounces. SRK did a job for us on the 43101, which is a preliminary economic assessment. Gives us a mine life of 17 years. Most importantly, the most important part of this is that you've got a payback of under 20 months just using the copper and molybdenum values. I can tell you that in the next study, we expect that to be considerably shortened, because within the preliminary economic assessment, SRK make the point, and this is in the document if you guys wish to read it, that they expect that to be shortened considerably because there's a high-grade zone near surface that we will mine in the first 2 years that will considerably reduce that payback time on capital of $180 million. As I say, we'll bring that gold and silver to account in the next 3 months. Another of the reasons we like the project is that photo. The tailings dams are in place. There's a wealth of infrastructure, around about $70 million we estimate to replace that doesn't have to be built. So this is a brownfields project which doesn't have a deep pit because it was only mined for a very short period of time, but has a lot of infrastructure in place. That describes the transaction as it presently stands. Makeda ECR will hold 14.5 million shares and 14.5 million warrants. And they've been trading at a very high level of recent date, and we do expect it to be a very successful transaction for us. The mine was built in the late 70s, early 80s. The SAG mill, which was in that building, went off to Oktedi in Papua. It was built and operated basically on its copper value alone. It was financed at $1.60 copper, went into production at 62 cents. So it was uneconomic. They ran it for 3 months and shut it down. The difference between then and now is very straightforward. The copper price is much, much higher. The gold and silver can be brought to account, and they are a very important part of it, as is the molybdenum. Gold, silver and molybdenum represent about 25 to 28% of the total revenue, and they make it a very robust project in today's values. This is what the infrastructure looks like. This is the tailings dam that's in place. That's the central circle is where the plant was, and that's the pit. The pit's about 30 metres deep, 30 feet deep, sorry, and had very little taken out of it. And that's, if you like, the country. It is a desert environment. We're involved in the solar power business because we think that New Mexico is a great place, the sun shines a lot, and we think you can make money out of it. And the reason for that is that the mine is here. We have pegged some areas which if we're able to develop them successfully would allow us to do up to 80 megawatts of solar power, and there are 2 major power lines that run through our district. So we are opportunistically taking advantage of something that may or may not come off for us. It's not a big investment from our side, but if it worked, we would have an ongoing cash flow from the mine and a capacity to sell power into these grids. We have an association with renewable energy, remote energy solutions. That company, represented by Anne Carpenter, has a lot of expertise in this sort of an area, and we will continue to push expertise as we find it and source it into the project to see it develop. I'll talk briefly about ACS because, especially in relation to the solar, it's pretty interesting. We bought into this business at the height of the global financial crisis because we wanted to make sure that if we were never able to raise further capital, we'd have some sort of a way of surviving. Michael Silver has an extensive expertise in this sort of engineering, and we were able to buy the business cheaply. Since we've purchased it, we've spent, ECR spent about $700,000 US in acquiring a 70% interest. That was part of a purchase price of approximately $2 million. The company's made enough money to pay that debt off, and has been able to support us through some of the difficult times with some fees. The business, it's quite interesting. They make a product which represents about 40% of the cost of a solar power plant, namely the simple things that support it. So in actual fact, there's a synergy there that we're working on at the moment, which allows us to think that we can keep control of the costs on the solar side and understand them, and perhaps make some money for ACS, which is presently quoting on a number of solar power installations simply because of our association with that business. Sierra Las Minas is, as I say, the project that we got involved in because of a uranium project that we had a look at. It's in La Rioja province. It is a piece of ground that's about 50 kilometres long and about 17, 20 kilometres wide. It has a bunch of old gold mines on it. It's the sort of thing that you would have pegged in the late 70s or early 80s in Kalgoorlie and thought you were very lucky. I haven't come across one where you can do this around the world for many a year. And it has a number of high-grade gold showings on it. We own it 100%. It costs us very little to acquire, and we'll sneak up on all of these little gold showings over the next while, developing targets, exploration targets, and then drill targets. We're aggressively putting a program of exploration together for it at the moment, which will commence sometime in the next month or so, and we'll be talking to the market about that in due course. Geologically, it's also fascinating. There's this band of volcanics, and you've got all these shoots of faults coming off to the side and a big line of them that cut across it. And so all the geologists who go there get very excited about the complexity, and I'm hoping that we're going to have a lot of fun there. It's difficult country, difficult to get through. It's mountainous, part of the reason it was there, but the real reason we were able to get it, it has been explored before, in some regards to the south in particular, is because of this problem that there was with the Argentinian local state government. And that remains, for me, the biggest risk in this whole thing is what happens to mining in Argentina. Okay, Peni, I love talking about. I've seen those nuggets. They're extraordinary. They're just extraordinary. This is a story. Michael Silver has a colleague, Barry Smith, who was the managing director of Dominion, which became a big mining company in Australia. Barry's a jeweller up in Bali, and he came across a gold buyer who 4 years ago started to get gold out of the Papuan province of Indonesia and started to buy big lots of it, nuggets like this. he sent his son up this river, the Derrawa River, 5-day walk, and the boy came back with 50 kilos of gold, which is 1,500 ounces. And since that time, this family has mined about 100,000 ounces of gold, and they have become seriously wealthy. It's as wild as you can get. It's about 80 kilometres from Grasberg. It's the closest things to it that some of you will remember are Mount Kare, which was in Papua. The old one that you all saw photos of when you were young was called Sierra Pelada, that thing in Brazil where there were 10,000 people digging down in that hole. It's alluvial gold, which of course is not normally in favour, but if it works and you can find gold the way they are still finding it there, it'll be extraordinarily successful. When I went there, these guys were going down a shaft, 20 metres, 25 of them for a shift, water everywhere, the most dangerous things I've ever seen in my life, and hand-picking gold out of the rock, right? Quite seriously. And that day they got about 27 grams, just a little under an ounce of gold between them. They thought it was Christmas time. There's a huge tonnage of this alluvial material there. Whether the 500 diggers who've been through it have picked all this good stuff out is the real question. It won't take us long to find it out. It's about a $2 million expenditure to find out if it's real. And if it's real, it'll be very valuable to us. And if it's not, that money will be really lost. Silver Swan I spoke about before. We've still got 4 million performance shares in it, and they are working very hard at developing what I think is going to be a very exciting prospect. It hasn't been as quick for large-scale discovery as, say, Sandfire, the one you might compare it with, but certainly they've had some fantastic results in the drilling to date, and they've recently put some holes in that they've got high hopes for as well. These performance shares we have basically give us another shot at the title if they're very successful, and if they're not, I'm more than satisfied that we've done well out of our work on the project. Meekatharra is a resource of 2.5 million ounces. We had a tremendous struggle with it 2 years ago, and as I say, it's now under a contract to a company that's intending to list it in Canada in the short term. At these prices of gold, it'll be a very profitable operation. Okay, I think I've explained how we try to do it. Perhaps I'll just say that Michael and I, he's been in it since the 60s. I've been working projects since the 70s, through the 80s, through the 90s, through all the bad times. And if you look at this to conclude, you can see just how life can turn things upside down. The thing I'd point out for you is that this inflection point, I don't know how many of you guys actually look at it, is September 11th, 2001. It's right there. Right, September 11th, 2001, as far as the gold price, I don't have the copper chart because the base metals are different, but as far as gold is concerned, this is when the uncertainty and volatility entered the market, and I think it's unlikely to leave in the short term. And that to me, it was at the point at which I like to say that fear became global and danger actually became local. I was about 500 metres from when that thing went off in Liverpool Street Station. So it's very, very real. The driver of this is this incredible surge of volatility. Now, my career started here, right there. So I sold my first business successfully there, as you do, and then went through these, which were extraordinary, and then went through the nuclear winter, which you guys all probably did, which is all this period. So what we're trying to do, what Michael and I tried to do in ECR, is present something that can take advantage of this, which we think we're doing, but which is also resilient enough if the party stops and shareholders aren't put in a position where there's nothing left. So that's our intention, is to take advantage of this wonderful circumstance that we're all in and survive the bad times if they come again. Thank you very much.